Would you pay $1.75 trillion for a company that lost nearly $5 billion last year? Because that's exactly what the market is being asked to do right now. And here's the part that should actually concern you. Whether you said yes or not, your retirement account might already be in line to buy it. This is the largest IPO in history, and most people watching it have no idea what they're actually looking at. So, let's fix that. Today, we're breaking down what SpaceX actually is, how the company works behind the scenes, and what its future could look like. Then we'll dive into 4 critical points that almost nobody is talking about, uncovering the details hidden deep in the fine print. And finally, I'll show you what all of this means for you and what you can actually do about it. Section 1. What is this company actually? Before we talk money, you need to understand what SpaceX actually is right now, because it is not what you think. Everyone pictures rockets and satellites. That was true 6 months ago. But earlier this year, Elon Musk folded his AI company, xAI, directly into SpaceX in an all-stock deal. That means the thing going public is actually 3 companies crammed into one ticker. You've got the rocket business, Falcon 9 launches, Dragon capsules, and Starship development. Then you've got Starlink, the satellite internet service. And then you've got the AI unit, which includes Grok, the social platform X, and a massive data center operation. Think of it this way. Starlink is the cashier keeping the lights on. xAI is the backroom renovation that never stops costing money. And the rockets are the founder's dream that everyone bought a ticket to see. Here's why that matters. Starlink generated $11.4 billion in revenue in 2025 and is the only profitable part of the company. The rocket business lost money, mostly because $3 billion went straight into Starship R&D, and the AI unit brought in $3.2 billion in revenue, but burned through $6.4 billion at the operating level. So when people say SpaceX is profitable, what they really mean is Starlink is profitable, and it's currently subsidizing everything else. Okay, now that you understand what's going on in SpaceX, let's dive into the 4 critical points that almost nobody is talking about, starting with the price tag. But before that, if you like more content like this, make sure to hit that subscribe button so you don't miss out on future videos like this one, and I hope you enjoy the rest of this video. Now let's talk about the number that should make every investor stop and think. At $135 a share, SpaceX is priced at roughly 94 times its annual revenue. Let that sink in for a second. If you applied that same math to NVIDIA, a company that actually prints billions in profit, it would be worth $24 trillion. That's bigger than the entire U.S. stock market. Even Morningstar, a firm that values companies for a living, says SpaceX is worth less than what they're asking. Now, the bull case is real, and you have to be fair about it. SpaceX has 10.3 million Starlink subscribers across 164 countries. It's the dominant force in commercial launch, and they're claiming a total addressable market of $28.5 trillion, the largest anyone has ever put in an IPO filing. The optimists say you're buying the infrastructure of the next 50 years at a price that will look cheap in hindsight. Maybe. But at 94 times revenue, there is almost zero margin for error. One bad quarter, one Starship delay, one Grok competitor, and that valuation has nowhere soft to land. The second point, your retirement fund and the index situation. Here's where it gets personal. When a company this large goes public, indexed funds don't get to vote. They're required to buy in automatically. That's the whole mechanic of passive investing. So the question everyone is asking is, does this affect my 401k? The S&P 500 said no. S&P Dow Jones Indices kept its profitability rule completely intact. A company must be GAAP profitable to enter, and SpaceX is not. If your money is sitting in an S&P 500 fund like SPY or VOO, you're not getting forced in. That's the good news. The NASDAQ, however, rewrote its rulebook. They created what they're calling a fast entry rule. Any company large enough to rank in the top 40 of the NASDAQ 100 can be included in as little as 15 trading days after the IPO. No waiting period, no profitability requirement, and critically, no company gets bumped out to make room. The index just temporarily carries more than 100 names. FTSE Russell indices went even further with a 5-day entry window. So if your money is in QQQ, QQQM, VTI, or any total market fund, which covers tens of millions of people, the machines will buy SpaceX for you automatically within weeks, whether you wanted it or not. The exposure will likely be under 1% of your fund's value, so this is not a reason to panic sell everything, but it is a reason to know what's in your portfolio. When Tesla forced its way into the S&P 500 in 2020, the buying was several times larger than what SpaceX will trigger, and the broad market barely flinched. The chaos people are predicting almost never materializes the way they imagine.
Point number 3. The lockup clock. Now here's the piece most people completely skip over, and it's the one that has historically hurt retail investors the most. After any IPO, insiders, the early employees, venture investors, and founders are legally frozen from selling their shares for a set period. That's called a lockup, and when it expires, a wave of selling can hit the market all at once. SpaceX has an unusual staggered lockup structure. Instead of one expiration date, insiders can start selling as early as 2 days after the first quarterly earnings report, which lands around August 2026. Additional tranches unlock based on stock price milestones and set intervals through 135 days. The final full unlock lands around December 2026. Elon Musk himself is locked up for a full 366 days, which is actually a meaningful signal. He can't sell until June 2027. But here's what history tells us consistently. Palantir dropped 13% in a single session the day lockup expired. Rivian fell 20% in one day when Ford disclosed it would sell its stake. Uber hit an all-time low on its expiration date. The pattern is almost mechanical. The higher the hype at IPO, the harder the landing when insiders finally get to cash out. And with 30% of this IPO handed to retail investors, 3 times the typical allocation, there are a lot of people who bought the excitement and will be first in line to feel that pressure. The December window is the one worth circling. 4th point, what's buried in the fine print? Every S1 filing has a risk section. Almost nobody reads it. Here's what's actually in there. Elon Musk controls 85% of the voting power despite owning roughly 42% of the equity. That means as a shareholder, you have almost no say in anything. If he decides to redirect profits toward building a city on Mars, you cannot stop him. That's not speculation, that's literally in the prospectus. The AI unit is also worth understanding clearly. The XAI segment spent $12.7 billion in capital expenditure in 2025, more than the rocket business and Starlink combined. It's the fastest-growing cost center in the company. And the financials themselves are tricky because SpaceX combined 3 companies retroactively under accounting rules. The clean historical numbers for standalone SpaceX no longer exist as a comparable. You're essentially evaluating a new entity. One more thing that doesn't make many headlines. Starlink's revenue per subscriber has dropped from $99 a month in 2023 to $66 a month by Q1 2026. The user count is going up, but each customer is worth less over time. That's a trend worth watching because Starlink is the engine powering everything else. Okay, now what can you actually do with this as an investor? So let's bring it home with something practical, because information without a plan is just anxiety. If you're in S&P 500 funds, you're not affected today. But there's an important second chapter here. If SpaceX achieves GAAP profitability by mid-2027, that S&P 500 inclusion would trigger a massive fresh wave of forced buying. That could be the more interesting entry point. Put it on your radar for 2027. If you're in QQQ or total market funds, you will hold a small slice of SpaceX automatically. It will be under 1% of your fund. You don't need to do anything dramatic.
Just know it's there. If you want to buy SpaceX directly, the case for patience is strong. The average IPO pops about 19% on day one. That pop is manufactured excitement. It's the bait. Over the following year, most hyped IPOs underperform significantly. The playbook here is straightforward. Let the noise settle. Watch what happens at the August earnings unlock when insiders can first sell, and then reassess seriously heading into December. You are not missing a once-in-a-lifetime window by waiting 90 days. And if you want exposure before all of that plays out, there are existing mutual funds that already hold SpaceX as their largest position and have for years. You don't have to chase the IPO to get access to the story. This is the largest IPO in history. It's worth understanding. It's not worth panicking over, and it's not worth chasing. Drop a comment and tell me which fund you're in, SPY, QQQ, VTI, and I'll tell you exactly how this affects you personally. And if you want to learn more about the quantum ETF boom that's happening, make sure to watch this video as well.